Okay, everybody, it's me, Gregory Mannarino. It is Friday, August 20th, 2021. Let's talk about the setup here this morning for the market. It appears to me, slightly at least right now, that the fear trade remains. Now, yesterday was unbelievable. Every time the market dipped, it got bought up. Let's see what happens today. Right now, stock futures are mixed. We have Dow futures slightly in the red, S&P futures slightly in the red, NASDAQ futures are positive. Okay, lovely. The 10-year yield down a little bit. Okay, dollar slightly stronger. There's our fear trade. All right, and every time, really, every single time this has happened for the last, I don't know, a whole bunch of years. It's proven to be a massive buying opportunity. And look, keep this in mind for those of you that think it's not, and I know there are some. This market hit a record high Monday, several record highs the week prior. It needs to give back a little bit, but it doesn't look like that's going to happen. The dips are being bought yet again. Imagine how surprised I am. You can't imagine how surprised I am. No one can. Okay, so as I said, you got this mechanism here. 10-year yield lower, dollar stronger, stock futures, slightly lower, except for the NASDAQ. So we'll see how that plays out. The fly in the ointment here, okay, remains to be crude oil, which is under pressure. It's about $62 and change. In my view, this is entering the danger zone right now, where you can expect something to happen, something to prop it up. They do this over and over again. We've seen this repeatedly. So let's see what they do with crude moving forward here, people. You know my take on this. I hate to say this, but I stand with the investment banks on this. The Wall Street investment banks, all of them, are saying crude is going to be surging higher moving forward. And, if Goldman Sachs is correct, what did they say yesterday? We can expect a coming inflation surge. Their words, not mine. Okay, we got the third warning yesterday from Citigroup with regard to this market, the stock market taking a hit. Okay, the last two warnings about the stock market from Citigroup proved to be massive buying opportunities. We hit record high, record high, record high. It doesn't seem like these people can get it together, honestly. But again, it doesn't matter. You and me, we're not relying on Wall Street super banks. We're relying on our own brain to tell us where assets are going. And all you have to do is watch that 10-year yield, the dollar, crude oil, and the Fed's balance sheet, which is continuing to hyper balloon. That's where we are at. Now, we heard from Fed President Kaplan. He's another one lately who's just coming out of the woodwork. He wants his 15 minutes of fame. And he's already setting it up for the Fed to move goalposts, saying, oh, the Fed is watching the variant very, very closely, and that may cause them to, have to adjust their tapering whenever that's going to come. It's not going to be anytime soon. And let me explain this to you real quick. Even if the Federal Reserve says, oh, we're going to start to taper, whenever that might be, they can say whatever they want to. Okay, it's what they're actually doing, and we can see what they're actually doing by, again, watching the debt market action. The way they have this set up, the Fed, they have minimum asset purchases per month. I think we all know that, okay? $100 billion worth of treasuries and $40 billion in mortgage-backed securities. Those are minimums. We're not even allowed to know what the tops are. Okay, there is no top. So, they're very ambiguous. And they're not going to stop because their end game here is to own it all. Their end game here is to be the lender and buyer of last resort. Let's move on. Right now, gold is slightly higher. Silver slightly lower. I know the game, people, and a lot of you continue to write to me about gold and silver. You're very unhappy about the performance. I got it. But these are not trades. I've said that a billion times for years. These are long-term holds for which we understand why we're holding these things. Look, the environment now is risk on. It's risk on, meaning cash is making its way into equities. Risk on will become risk off. It's a cycle. Markets always cycle. Well, generally, they used to do that. But again, this is a setup for an implosion in the debt market. When the implosion in the debt market happens and rates spike, the 10-year yield is going to spike at an uncontrolled pace. That's going to put a lot of pressure on the stock market, and cash is just going to move. It's going to move into commodities, especially into suppressed assets. It's also going to move into cryptocurrencies, in my view. And speaking of cryptocurrencies, they are taking off. They're taking off. For those of you out here that bought the dip when I said to, I mean, to say the least, you've ripped the face off of the cryptocurrency space. With regard to Dash, I mean, if you bought that dip, you're up probably nearly 100% on that trade. It's pretty staggering at this particular time. Anyway, and so for those of you that wrote to me, hey, Greg, how'd that Dash trade work out for you? How about it's working out better than you could possibly imagine? How did it work out for those of you that didn't buy and told me I was wrong? I guess it didn't work out too well for you, did it? No, and I expected that too. I knew you were all going to look like fools. You always do. All these people that have been so negative on crypto over and over the years, they've been made to look like fools repeatedly. And I guess they like to be clowns. Maybe they should go join a circus. What do you think? Anyway, all right, people. So that's the story for this morning. Keep your eye on that 10-year yield, okay? That's the key. That's the key. Crude oil is important, but the 10-year yield is the key. The dollar here is also a key too, but the real key is the 10-year yield. It's the debt market. The debt market is the monster, the hyper bubble that's supporting everything else. You understand? So let's see what they pull off today. Let's see how this plays out today. It's going to be very interesting in my view. I just love following this stuff. I really do. And I will keep all of you on the right side of this, as I always do. I made a promise to you years ago, and I think I've kept it. All right. With that said, love you a lot. Please share the video. I'll see all of you later.